First and foremost, I do want to say risk management is probably one of the #1 things you can ever learn with Forex, and it has to do with your mentality a lot. The mental aspect of Forex is very important, and being able to control risk and handle risk is going to be pretty much what puts you over all the other traders, okay? When it comes to risk management, I think one of the biggest things for me personally and the way I teach is risk to rewards. Okay, if you have a good risk to reward system and you let your profits get hit, then you're gonna be good. You know what I'm saying? So let's say you have a 20 pip stop loss and a 100 pip take profit. If that stop loss gets hit 3 times and then you win once, right? You just win one trade with a 20 pip stop loss, 100 pip take profit, you're gonna be up 40 pips. 3 losses, 1 win, and you're up 40 pips. That's pretty good, guys. That's really good.
The goal is to understand risk management. You're gonna use a stop loss, you're gonna use a take profit, you're gonna know your entry point, you're gonna take your balance times the percent you wanna risk, divide it into your stop loss, you're gonna find the lot size you're supposed to use. A lot size is not something you just throw out, it's calculated, it's a formula. Here's the thing that I suggest you do. Download this app called Stingu. It's gonna help keep track of the lot sizes you're supposed to do. You're supposed to trade with 1-1 or better risk reward. So if you're trading with a stop loss, you're gonna get stopped out. Like I trade 10% of my account every trade, but I'm always gonna target a 1-1 through a 1-5. So I can take a trade and risk 10%, let's say 10K on 100K. I could risk 10K to make back 10K, or I could go for a 1-2 setup, risk 10K to make 20K, do a 1-3 setup, as you can see, this is going on and on, risk 10K to make 30K, or max I do is a 1-5, I could risk 10K to make 50K. Keep in mind, it's a 100K account. What did I just do? I can make 10% to 50% of that account on any given day. I got 5 trading days out of the week. I got 20 trading days out of the month. I'll only take 1 entry per day, and that, if I lose, great. But I got another day to trade tomorrow.
What do you feel like is the biggest barrier to psychology in trading? Honestly, the biggest barrier of psychology, the biggest effect on psychology in trading is actually risk management, believe it or not. And I'll explain to you why, right? Let's say you have a trade and you jump into a trade with an under-leveraged lot. So let's say you're supposed to use a 50 lot and now you use a 10 lot. How do you feel if that trade goes sideways? Do you care as much as if you use a 50 lot?
Not at all.
Exactly. So that's where people don't understand the correlation between risk management and psychology, right? If you're over-leveraging, your psychology is going to go to shit because you're over-leveraging and now you are worried about where the trade is going to go. Versus if you're under leveraging or maybe just leveraging where you're supposed to, your psychology is going to be a little more on point, right? And that's one part of the psychology. The next part of the psychology is once you are in profit, where do you get out in the trade?
It doesn't matter what size funded account you're trading. If you're trading 100K, 200K, 50K, it doesn't matter. You always want to look at the percentage of the account and how much you're risking on a daily basis. So when it comes down to any account, doesn't matter if you start off on a challenge, doesn't matter if you start off on a verification, or doesn't matter if you're already funded and you're looking to just simply improve your risk management system. Your goal is to preserve that 10% buffer that you have to actually lose as much as possible. So your risk when you first start the account needs to be very low. For me, what I risk when I first started a funded account or a challenge account is I risked 0.5%. So I essentially risked half of a percent all the way until I got to that about 5% gain mark. Once I actually got to that 5% gain mark, then I increased my risk to a 1% gain, where I then looked for, again, a 2-to-1 risk to reward ratio on every single trade. And if all of those trades were successful, then I passed the challenge fairly quickly. But like I said again, guys, your goal is to preserve that 10% as much as you possibly can before you start looking to increase your risk. So I wouldn't start risking 1 or 2% right off of the bat. What I would do instead is start by risking half of a percent per position on my challenge account. And then once I get to a 5% gain, and again, I'm looking for a 2-to-1 risk to reward ratio per trade. Once I get to that 5% gain, then I start increasing my risk to about a 1% risk. And if I go back to break even, let's just say I lose 5 trades in a row and I lose literally 1% per trade and I'm back at break even, then my risk resets back down to a 0.5% risk per position. Once I hit that 5% gain and I'm up 1%, obviously I'm looking for a 2-to-1 risk to reward ratio. It's only gonna take me roughly 2.5 trades to then reach that 10% profit target and pass the challenge. Some funded companies only do an 8% profit target, which in that situation, like a leveled up society, we only do an 8% profit target, then it's only going to take me literally 2 trades to actually pass the challenge. When it comes to the verification, it's literally the same exact thing for the fund, or as the challenge account, the risk management. I risk 0.5% until basically I get to around like that 2.5% mark, and then I risk 1% look to gain 2.5% on that specific position, so then I can pass the verification fairly easily. Now, when it comes to the funded, this is where things get a little bit different. So with the funded account, I start off by risking 0.5% all the way until I get to a 5% gain. Now, in between that 5% gain and break even, once I'm already up, I risk 1%. Again, if I go all the way back down to break even, let's say I had a 100K account, I was up 105K, now I'm at 100K again, I'm going back down to that half of a percent risk. And the reward ratio I shoot for every single trade is always going to be the 2-to-1 risk to reward ratio, meaning if I'm risking $1,000 on the challenge, I'm looking to gain $2,000 on the challenge. But when you start off the funded account, I risk $500 to gain $1,000 on the challenge account for an 100K. Again, the percentage is very simple. 0.5% looking to gain, 0.5% looking to gain 1%. Just to really quickly recap everything, right? Once I get to the funded stage, what I do now in this situation is I risk 0.5% all the way until I get to about a 5% gain. Once I'm at a 5% gain, I risk 1% all the way until I get about a 10% gain. Now I have a 10% gain buffer where I could look to increase my risk. And every 5% that I drop, I decrease my risk. So as my profit increases, my risk will slowly start to increase as well. But as my profit starts to decrease, my risk decreases as well. So again, now let's say I get to a situation where I'm up 10%. I'm now going to be risking 2% per position to look to gain 4%. But if I risk 2% and I drop back down to 5%, a 5% gain on the account, and then decrease my risk to a 1%. Let's say I go back to break even for after being up 10%, I decrease my risk to a 0.5% gain again, or to a 0.5% risk per trade again. Now let's say I go all the way up to a 10% gain and I start risking 2% per position. Now I'm up 20%. My risk is going to stay at that 2% per position, and I don't look to take more than 2 trades on a single day. So again, it's a very simple yet effective risk management strategy for you guys that you guys could look to incorporate into 2023.